Hi everyone. Today let's talk about how US stocks got rinsed and why it's actually a little bit worse than it may look already. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So US stocks got rinsed. Why is it worse than it already looks? You can see the dollar has slid about 10%. We've been watching the dollar go lower. Trade negotiations between the US and Japan are set to start this week. Hopefully that leads to some good results. We'll see if there are any positive outcomes there. Otherwise, this is a good time to start to consider currency ETFs as a potential move against the dollar. They say if you're just coming to grips how bad stocks have been recently, now is no time to panic. It's only down 8% so far. The dollar has skidded 9%, and that actually makes it a little bit worse than you would expect because it's harder to buy things because the dollar is weakening and your amount of dollars is also weakening. So you can see here US versus other majors in dark has gone down to one of the lowest levels that it's been in a while. We've been watching it on the dollar. It's taken out this low here on the DXY, and a lot of asset managers are moving into the yen. The yen seems to be a better place to be, at least in the short term. You can see here bullishness on the yen, but why the yen? Because Japan has a nice trade surplus with the United States and other big economies, putting them in a good position to be successful in the current economic environment. And also Japan's top negotiator is meeting with Donald Trump and the Treasury Secretary, so it seems like they're in a good position to make deals with a lot of people, putting Japan at an advantage really in the global economy. So is the yen a good place to be? Is the dollar not so much a good place to be? It seems likely, but really, is this something that you want to trade? There are some opportunities here. Do you want to go Euro, FXE as a potential play for Euro currencies? British pound, Swiss franc probably wouldn't go there, but Japanese yen seems like one of the better places to be for now. You could obviously trade these directly if you wanted to in Forex, but these ETFs do give you exposure, but understand they do have fairly decent expense ratios, so you don't want to stay in them for too long. So overall, look at your currency risk. Are we losing money to the dollar and equities? So far we have. Do you want exposure to other markets? This is the place to be. Looking at fear and greed, we finished the week at a 21, up from a 19, so a pretty flat week. You can see it here, pretty flat. We'd had a slight dip midweek and then finished slightly higher from there, and you can see pretty much all the major indicators are still in extreme fear, with strength sitting down at that almost minus 10%, way below anywhere we've been over the last year. Breadth did start to turn up a little bit, and we'll take a look at that later in the video, but looking at put call ratio, still very elevated, but starting to come down. So we're seeing a little bit of normalization. We're not cratering seemingly every day at this point. That doesn't mean we can't continue to go lower at some point, either this week or next, but at least for now, price action has stabilized, and even junk bonds have moved into neutral, which does give us a little bit more calm, at least in my opinion. Moving over to the AAII survey, you can see this really does not move over the last month so far. 25 to the neutral here, stepping up about 5. Bears not so much, so really everything has stayed flat here. We are seeing just a little bit of contraction on the bear side, but really no movement. I still think there's a ton of bears in the market, which I do think is going to continue to hold down markets as we continue to sit pretty well off of our highs. And I still think lower lows are set to come over the medium term. Eventually this will start to roll up, but it's not doing it yet. Moving over to the calendar here for seasonality, you can see we're through Good Friday, and then looking at next week, supposed to be pretty bullish here. Remember, April is a bullish month, so we'll see if this comes to fruition, but Tuesday, Wednesday, Thursday supposed to be up pretty consistently, up 16, down 5, third rank there. And then looking at the calendar, a little bit of economic data, semiconductor billings, durable goods, existing home sales, and then some consumer sentiment from Michigan University. Overall though, maybe we get a little bit of a turn up next week. Moving over to the economic calendar, you can see pretty much nothing here Monday, Tuesday, and then you can see some soft data here for Wednesday, new home sales like we talked about. Not a whole lot of data this week. Fed Waller speaking, maybe there's a little bit more on what Jerome Powell was talking about last week. Thursday, durable goods orders, that could be interesting. Fed balance sheet, 7-year note auction, and then that Michigan data for the end of the week. So relatively low on the economic data for this week. Moving over to earnings for this week, we have a bunch of heavy hitters. Nothing here for Monday, but for Tuesday, we have Tesla, GE Aerospace, Verizon coming out, Lockheed Martin, Northrop Grumman, 3M, all going to be heavy hitters this week. Invesco, just for you QQQ traders out there as well. But Tesla, super interesting. Want to see how they're doing. They've had a ton of bad press, especially with everything that Elon is doing. Can they pull out a strong earnings? Can they meet expectations? That will be interesting. And then what is he going to say about everything that's been happening? For the Wednesday, we have Philip Morris, IBM, AT&T, Thermo Fisher, Boston Scientific, New Era Energy, Texas Instruments. Want to see how they're doing in the semiconductor space, if there's any risk there. I'm sure that there is, but I want to hear what they're saying, especially on the tariff front. Then you have Boeing, O'Reilly, Chipotle Mexican Grill. And then we really get kicked off here on Thursday with Google and Alphabet coming out, T-Mobile, PepsiCo, Caterpillar, Comcast, Gilead. Want to see how they're doing. Intel, that could be interesting. Again, watching this semiconductor space, this was one of the best sectors, one of the market leaders, and they are not leading us higher right now. Want to see them either regain the leadership or at least give us some clear direction. And then for the Friday, you have AbbVie, Colgate-Palmolive, SLB in there as well, some of those oil companies. So consumer staples, that could be interesting. Staples have been a really good sector to be in. Will that continue through earnings? I think this week will give us a better picture of where that is going here over the medium term. Moving over to Max Pain. Max Pain did not mean a whole lot last week, even with the third week options expiration. But just to keep an eye on it, you can see huge put walls here at 525. Current stock price 527. Max Pain 535. So for me, this says we should drift a little bit higher here, closer to this kind of 540 maybe, giving a little bit of room to the upside potentially over the next week. So we'll see. Also looking at put call ratio, 2.4, a pretty high number, looking slightly bullish. Moving over to the charts, starting off with the SPY here, you can see it was down 1.5%. So we did not get that kind of continuation into this zone that we thought that we might. We did go a little bit higher on the gap up, and then we fell through the week and finished basically unchanged from the Thursday into the Friday. Momentum continues to step to bullish slightly. RSI not moving back towards that SMA as strongly as we thought that it might. At this point, I think it's more likely that we come back down and test this 5 August low. Doesn't mean we're going to come back to this low necessarily, but I think 5 August touch, higher low setup from there if it's going to do it. Otherwise, if it pushes through there, I think the trend is back in play around 4,800, 4,888 potentially. If we can kind of hold this zone where we're at right now, the high from 25 March of 24, then you could look for a push to that 55 EMA as resistance at 56.31. If we did get that move, that would be about another 6.5% higher potentially. If we did retest that kind of 5 August low, that's about 3.5% lower. So actually, you could argue that's a pretty good risk reward. The problem is if we do go back to those lows or the trend line, that's about another 7.5% lower. And then looking at the daily chart here on the SPY charts, you can see still pretty consistent downtrend. Got super oversold, came back, tested resistance, and this continues to look like a retest of the trends, continuation lower. We're just holding up because of that Max Pain finish, that third week options expiration finish. And then if we do push back through there, like I said, I think we could go back to those 5 August lows, which is right back here. That would take us to at least 513, potentially as low as that 505 area. But if it does hold this, then you could look for that 21 EMA in that 544.40 area. So again, I still think we could go a little bit lower here. The trend is still intact. In terms of levels, 524.84, 517 in play, and then 505 if we did get a break through this zone here. Moving over to the Tasty charts here, you can see that down week, that lowest ATR band is sitting at 515.54. That's going to continue to downtrend, which again, I think this is going to continue lower here. When we go one more week, that should take us down to the 511 area, which is pretty much in line with those August lows. Obviously, we would need to throw a wick to that area around the 510 area, but I think we could get there. I think that's probably the best target for next week. And then if we did touch that area, maybe we get a little bit of a retracement. But for now, this is still very much a downtrend with that kind of medium term target 502.18 as that 144 EMA here on the weekly chart. And then looking at the daily chart here, again, just looks bearish, right? So we came up, retested those 21 EMAs, gapped back below the 8 EMA on the daily chart. That is sitting at 530.95. Could not get above it on the Thursday or Friday sessions. And if we did get that continuation lower, that lowest ATR band right now on the daily chart is sitting at 489.95. So plenty of room. That would take us back to that previous low to the downside. If we could hold this zone, like I said, I think that kind of 544 area is in play. That would take us back to that 21 EMA, almost back to this consolidation low. Again, I think the risk is certainly to the bear side, not so much opportunity to the upside. So just keep that in mind as we head into next week. Moving over to the NASDAQ here on the weekly chart, again, we had this blue trend, which is where we ended up finishing right around that 18,142 area. We touched that level and then bounced from there. We couldn't close below it. If we did, your next trend is quite a bit lower, about 3, almost 4% lower, 4.25, somewhere in there at 17,481, which again takes you to this August 5th low, which again, I think is where we're probably going. So we'll see. We'll see if we get back to that area, get the higher low, and then see what happens from there. Either way, if we did get this bounce, I still think this is a bit of a topping pattern. Still would expect a lower high setup, even if we could get into this zone, but short term looks bearish for me. Again, waiting to see if this trend line breaks. Otherwise, if it does not, then we're looking for a push to that 55 EMA, which is about 8.5% higher based on this chart here. And then looking at the daily chart, you can see still very much a downtrend, just like everything else. Major level 446.65. That's a key level that marks the turning point back here from this September low. Could not seem to get above it. We rejected from there again on the Thursday, Friday, which takes us to this next pivot point around that 432 area, and then that August 5th low at that 421.51 area. So again, you got some trends, got some key levels. We're kind of stuck in the zone here. Makes sense why we were flat basically for 2 days. But realistically, I think we're probably going to here, which is about 5% lower from current price. Moving over to the Tasty charts here on the Qs, you can see we are looking at the 144 EMA sitting at 421.99 as your zone of support. That lowest ATR band right now, 428.15. We'll see if this zone ends up holding or not, but this is where I think we are going to go. Again, looking at that 5 August week as the low, that's where I think we're probably going to head to. Continuation of this week, which was a bearish week. So looking for that to continue lower into this zone. Didn't really get any volume on this week. Huge volume the previous, got some selling. So maybe the buying pressure is going to come in here, but on a technical basis, for me, it says this should go a little bit lower. And then looking at the daily chart here, you have that 8 EMA as resistance, 449.43. Could not get above that level on the Thursday, Friday. Still very much a downtrend. And again, that lowest ATR band gives you a ton of space to the downside, all the way back to these lows here at that 407.90 area. If we did get a continuation lower, tons and tons of risk into that zone. So is the selling over? I do not think so. This is still very much a downtrend, and this looks very similar to this move here where you had a big move down, consolidation, slight retracement. It looks very similar to this here. Had a consolidation for a couple of days, and then we had a massive waterfall sell-off to that lowest ATR band. Maybe we get another little bit of consolidation in here into earnings, and then we get a big flush to that level. So something to consider. If we do get a resumption of this downtrend, there is plenty of room now to the downside within this ATR structure. Moving over to the Russell on the weekly chart, the Russell was actually slightly positive, 1.15%, continuing to hold this trend structure. That is the support right now for next week. That's going to be in the 181.60 area. Continues to hold this area. The Russell sold off a lot more than the others from top to bottom. That was about 28, almost 29% from there. Got a nice little bounce to current of about 8%. Is this zone going to hold? What happens even if it does hold? Are we going to head back to this area? I say probably not. So it's hard to say at this point. Do we get a technical to kind of dead cat bounce into this area? I think that's a possibility. As long as this trend line holds, you could absolutely kind of trade it here off of that support. We're coming off of oversold conditions, momentum kind of swinging to the bull side. The Russell had a nice little push at the end of the week when the rest of markets did not. You can see it had a positive Friday, up almost 1% there on the Friday, coming off of that 8 EMA. Momentum bullish, RSI bullish. So Russell looks good. And then looking at those levels there, 185.63 was the level. We closed above that on the Friday. You could look for a test of the 189 level, which is what we saw here from the Monday into the Tuesday. Gapped up, held that level, and then pushed touched that level and then rejected from there. Are we going to get a continuation? Certainly seems like a possibility. VWAP is in that same area as well at 109.78. And then if we did get into this zone, then you're looking at this low here from April, this kind of consolidation low from January of 24. So is this zone going to act as resistance? Certainly a possibility. But again, short term, the Russell actually looks okay here to start the week. Moving over to the Russell here on the Tasty charts, you can see we're already at that lowest ATR band. Like I said, it sold off a little bit more than the others. 185.11 is that level. It's going to downtrend a little bit more next week. 183.50 in there somewhere. But either way, we're still holding in this level. Are we going to get a nice little swing maybe to that 8 EMA at 196.40? Seems like a possibility. Still very much in bearish conditions, however. And then looking at that daily chart, you can see the 8 EMA is critical. We need to get above that here on the daily chart. That is at 186.24. We finished the week at 186.57, so we're above it by about 20 cents. Can we push here to that 21 EMA? That's a possibility. Again, that's somewhere in the 193 area, 192, 193, somewhere in there. Either way, that gives you a nice little opportunity. Again, this kind of looks like this, right? So you had a big push down, consolidation, a little bit of grinding price action, hit those key levels, and then you get that big flush. Can we get a nice little push into here between 192 to potentially as high as 197? I think that's a possibility. And then we get the kind of flush out from there. Also a possibility. Still very much bearish conditions. Lowest ATR band is 171.24. Moving over to the Dow here on the weekly, this had a terrible week, down 2.5%, mostly because of United Health dragging it down on that Friday. Clean double top continues to go through here, almost to that 144 EMA. If we did get the follow through, I think that's where we're going. But for now, that August low takes you right back to this level here, 382.20. That's probably the short-term low, takes you back to the low from 2 weeks ago as well. Highly traded zone there as well. Everything says we should go to here, and then we'll see what happens. Does it follow through to a lower low, or does it bounce from there again? I think that continues to be a question for next week and the week after. Momentum back to bearish RSI. Looks like this is going to continue lower in my opinion. Like I said, intermediate level 382.10, longer term level 373.74. Moving over to the equal weighted S&Ps, you can see the equal weights here positive on the week, continuing to hold that 160 and 162 area, closed above 162.57, my level there by about 10 cents, right at the low of this consolidation here. This is a bit of a blend between the Dow and the Russell was able to win out this week. So overall good on that. Got a nice little bounce there. Momentum stepping back to bullish RSI, looking to push towards that SMA at least a little bit. Can we bounce into this area here around 172, 173? That's a possibility. But for now, we're stuck in this kind of consolidation range back here from February of 24 all the way up until about August of 24. Tried to go higher, fully round trip that move. Does it break back down from here and push to that kind of 149.82 area? That's going to be interesting. But either way, right now it is holding support and just below the highly traded zone. Moving over to the ratios, looking at the SPY Russell versus the NASDAQ SPY, you can see SPY did underperform versus the Russell. We had a huge up week, retraced a lot of that move. The Russell had a great week relative to everything else. It actually was the top performer there, so good on that. And this probably continues to go a little bit lower. This looks like kind of a topping pattern. Maybe we see the rest of markets start to show a little bit of strength versus technology here, which makes sense. The NASDAQ SPY did go lower, so the NASDAQ was the underperformer, and that seems like it could continue as well, down to that 343 area. And if the NASDAQ is not leading us higher, then generally markets are probably not going to be going higher. Maybe the Russell continues to outperform a little bit, but everything else, not so much, continuing lower. So Russell, top performer, SPY in the middle, NASDAQ as the worst as we head into next week. Moving over to the SPX divided by the M2 money supply, you can see we came down and tested this high back here from 24 July. Tested that level. The high there was 22.33, and you can see the low here from 2 weeks ago was 22.24. So we touched that level, caught a bounce from there. So far, we have not come down and actually tested that 22.05 level, which is kind of the more important level in my opinion. Maybe this takes us back to that November of 21 high. That would be interesting. But this is a zone where you could absolutely get some positive returns over the next 10 years. From current levels, I still feel like we are in bubble territory. I just don't know if we can sustain the growth to keep us at these levels and going higher from here. Either way, I think we just have to come down a little bit more. If we could get down to the 19 area, which obviously would be a huge move from here, that would take us about another 17, almost 18% lower into this zone. That's where you start to really buy in heavier. You can see the lows that we were in from 21 back down here, 22 into this kind of 16, 17 area. Great buying opportunities. Had a nice run up to the 22 area. Obviously bubble territory here. We've since filled the bubble. Are we going to continue back down to those zones? I think that's a possibility. So medium to long term, I just don't believe that we're going to kind of bounce in here and continue higher. Short term, I could see why you would want to trade it here. We have these key levels that could be zones of support. Either way, though, anything above 2205 is still a bubble in my opinion. Moving over to the Mag 7. Mag 7 had a terrible week, down 5.58%. And again, this is part of why I think we're going lower. The technology that led us higher just is not doing it anymore. You can see rally up, long consolidation, breakdown, 3 bear candles, short consolidation, big breakdown, and that seems to be holding this trend. I still think we're probably going to go to this zone here around this 217, trend line somewhere in here, 215, momentum bearish, RSI bearish. We're still holding these lows. Do we go to the August low? That would take us back to this low here at 230.50. I think all of that is potentially in play, but either way, I still believe this is set to go lower. And if the Mag 7 is going lower, that's probably going to be leading the rest of the markets lower as well. Moving over to Apple and Microsoft. Apple was basically unchanged, down just 0.5%, right at the key level 196.78. Again, if it can hold in here, kind of the same thesis as everything else, then we're looking for kind of a bounce into that maybe 220 to 224 area. But if it does break down like everything else looks like it might, that 200 could be back in play around the 178 area. Momentum did kind of stabilize there. We did get a step towards bullish. RSI, maybe that comes back to the SMA and retraces there. Again, giving you just a little bit of bullishness. We're right at the low here from that August move. The Apple chart does look quite a bit different than all of the rest with this kind of grinding price action. August low, we're already there. And then looking at Microsoft also not having a good week this week, down 5.3%. Retracing a lot of that previous week's move, which was 7.9% up, down 5.3%. So are we going to head back down to 360? Are we going to take out this consolidation here, which is right where we are now, kind of at that midpoint? 376.07 is the level. Touch that and basically finished right there. Momentum bearish, RSI bearish. You can see the rejection off of the SMA already, which for me says this should be going a little bit lower, at least to the 360, maybe 352 area. And if Microsoft does start to sell like that, that's going to be quite bearish for markets in my opinion. Moving over to Tesla and NVIDIA, you can see Tesla was down 4.3%. They are heading into earnings next week. It's been holding the zone for a while, right there at 236. We'll see if that zone continues to hold or not. 232.57 also is a level, and then look at NVIDIA down 8.5%. Huge move down right to these September lows. Do we go to the August low? I think you have to assume that you probably will at this point. Close right at the low. I think we're going to go to that next level. 90.69 is that level. We tested it here. I think we're going to fill that and head back to that level. So we'll see if semis continue to lead us lower. I think markets are going to go with them. Moving over to Alphabet and Amazon, you can see both of these had terrible weeks as well, 6.63 and 3.79% respectively. Momentum and RSI, both of these saying a little bit bearish here. Alphabet, you could argue maybe slightly bullish off of this level here, but realistically, I would say these are both bearish. Amazon right at this low consolidation range. Do we go to the August low? That's in play at 153.54. You can see 200 and the 144 EMA. Just feels like we're going to get magnetized to that level, which is pretty substantially lower, about 11.5% lower. Similarly here on Alphabet, if we do go back to that next level, that's going to take us to that 143.82 area. That is below this kind of September-August low. The structure on Alphabet isn't quite the same as everything else, but we're right at this low here. Do we go to the next one, 143.82? I think so. And realistically, I would guess that this is going to go back to that low at the 200, which is about 9, almost 10% lower. Moving over to Staples versus discretionary. Staples had a great week, 1.89% to the upside. Discretionary is not so much, 2.28%. So continues to be a risk-off market. Staples looking good, discretionary is not so much, right? So Staples looking like they're going to push potentially to the 84.20 area, back to those highs, 84.50 potentially. Whereas discretionaries, I think these are probably headed back to that 200, the 144 consolidation, which is about 5.5% lower. Do we go all the way to the August low? Maybe. That seems a little bit less likely, right? So this is a key area of support. Can that support continue to hold? Remains to be seen. So far, so good on the touch and the bounce. Do we touch it again and then bounce? That we'll have to see on the next touch, which I do think will happen. Moving over to Breadth. Breadth had a positive week, but it finished really unchanged on the week. You can see finished right in the same zone, gapped, finished unchanged, and then similarly here on 50-day did gap, did go a little bit higher, but could not get above that next level at 26.39. Either way, though, these are still at very, very low levels. If we reject from here, I would expect a bigger flush out for equities. So we went very low. We had a retracement. It looks like a lot, but 27 breadth is still very, very low. The peaks for breadth is in the 82 range on the 20-day. Similarly here on 50, it goes kind of up into that 89 area. You never really quite get 100, but the fact that we rallied so aggressively and we're still only at a 24 and it looks like we're going to reject from here is not a great indicator for markets, in my opinion. Momentum says maybe, RSI still says bearish. Moving over to 200 breadth, you can see we got all the way down to a 15. So far, we've bounced a little bit. This again says to me we might have a little bit more room here into this consolidation. Looks more like what we're seeing on equities in terms of levels. We get a push down, push into the zone. That next level is the 42.26 area. That's where this stalled out here. That's a consolidation bottom. We haven't quite gotten there yet. So maybe we see a little bit more retracement, hit that area, and then we get the consolidation and then break down from there. But for now, 200-day breadth says we're still in this kind of depressed area. Maybe we have a little bit more room to bounce. Moving over to the dollar on the weekly chart, this continues to sell 5 weeks in a row of straight selling. Momentum very bearish, RSI very bearish. The dollar just keeps going lower, broke this key level, and it seems like it's set to go even lower to that kind of 96.8 area. And with that move, we have not seen equities hold up that well. So usually when the dollar is selling, that means people are moving into other assets like equities, and that has not happened really. So I think the dollar selling has helped equities stay flat in this area. If it had not moved like this, I think equities would have dumped even harder. But the fact that the dollar is selling and equities aren't bouncing is not a great indicator either. So maybe this continues to sell and we get equity bounce, but for now, seems like everything is selling. Moving over to bonds, JNK and TLT having an okay week. TLT basically unchanged, up just barely less than 1%, but we're off of the level, so you like to see that. We hit the level and bounced, held in this zone. Want to see that continue to happen. We had the terrible week there at 6.4% down so far, kind of holding in this buying range for me. And then looking at JNK, I like this move, 1.4%, hit the key level, $91, took us back to this consolidation low, touched that level and bounced. So far, so good on that. And if JNK continues to hold in here, this should be a little bit of a leading indicator that equities should be in good shape, a little bit better at least. And so far, we have seen that start to take hold in the Russell. The Russell did outperform this week. And if the Russell starts to outperform, maybe we can find some better opportunities in the industries outside of tech. Moving over to the VIX did come down a pretty decent amount, but it did stall out at that 28.89 level. Does it push through here and push back to this kind of 20 range? Maybe. Momentum stepping down, but we're right at the RSI. Is it going to spike up, give us a lower high setup and then continuation lower? I think that is the more likely case. So I think we bounce from here. I think we hold this zone and then get a little bit lower spike, maybe into the 40 range, retest some of those levels that we talked about, and then we could see a bigger rejection from there. Maybe equities find some relief from that lower low setup, but we'll see. For now, we did get a low move. It could absolutely push through back here into the 18 range, push straight through. That's also a potential outcome. Moving over to my accounts, I ended up positive on the week, about $400, which was good considering that the broader markets were down on the week. So pretty nice move, couple of $100 there, made a few hundred each day seemingly. And then I did not hold any positions into the week here because I just wasn't sure where we were going to go. It seems most likely that we end up going lower from here, but we'll see how it plays out. As we head into the Monday, I thought we were going to go lower even there because we did have that max pain, which did hold us up, but now we're going to see that push lower in my opinion. So we'll see how it plays out. Here, I do think there is a good potential for a lower move, but we did have that consolidation and then we ended up not breaking in either direction. So Monday, I think will give us more information for a potential direction, but I still lean just slightly bearish from here. Let me know down in the comment section if you are trying to hedge against the currency risk that we are seeing in markets right now. Are you looking for other places to be, maybe international equities potentially? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.